Alright, this is going to be the first video in hopefully what will end up being several videos on the blog, and I may end up actually going more to video type recap things than typing to save myself some of the time. But anyway, I'm going to start with looking at a chart of SPY here, which is the S&P 500 ETF, and underneath it is a stochastic study. And this is a 60-minute chart, so each one of these little candlesticks up here is 1 hour of trading. And what I wanted to point out is look at the relationship between price and overbought signals to gauge the direction of trend and potential trend change here. So just pay attention to the red line only on this chart, forget about the blue line. And what we're going to be looking for is anytime the red line is above this 80 value, which indicates an overbought signal. This is the March low down here around March 6th, and then this is the current price over here. We have an overbought signal here. The next time we get overbought is at a higher price. The next overbought signal again is at a higher price. Next overbought signal, a little bit higher price, and we see that happen again here and again here. And then here there's an overbought signal at a lower high, and this was kind of an area where a lot of people, based off of patterns, myself included, were looking potentially for a top of that rally, and it did a nice little fake out, ended up making higher highs, and then we went back to several overbought signals here at progressively higher highs. Then we hit an area where price continued to advance, but let me zoom in here. Price continued to advance, but the stochastic made lower highs, and that's called a divergence. And that usually leads to a little bit larger or more significant decline. And in this case, it did. Got another overbought signal right here. The price was up here at this one, which is a little bit higher than the last signal here. And then finally now, just as of yesterday, as of Tuesday, got an overbought signal at clearly a lower high than the previous signal. So I would interpret this as a possible shift to an intermediate downtrend. Of course, maybe we would get faked out again like we did back here, but that's why it's going to be important as far as trading to have stops in for inverse ETFs or short trades above those highs in case the market would happen to go on to higher highs. The next thing I'm going to show is kind of going through some of the tops of the bear market to date and show what I think is happening right now in relation to what's happened in the past, because there's been a relatively consistent pattern of what happens after the top and when the real good short selling or inverse ETF buying point is. And I'm going to focus back on last year at this time, on the March to June time frame, to show what I mean, because it's a good example. There was a major low in March, or a intermediate bear market low, and then off that low we saw a series of highs and lows, making higher highs and higher lows this whole way up here. And finally we hit a high up here, and then there was a correction or a pullback that actually exceeded this recent low and undercut that support area. Pretty much as soon as it did that, it rallied for a few days, came back down right near the lows of this pullback, and then rallied again. And so it looks like an ABC type of upward pattern, and that would be familiar to anyone who knows a little bit about Elliott wave as far as the ABC corrections. Then after that kind of shakeout process, the market was able to trend more steadily to the downside for the next month and a half or so. Now I'm going to zoom in on the August high last year, and we saw a similar thing. It didn't take as long, but we had a low in July, we had a series of higher lows, and then we have a decline that undercut the most recent lows, undercut these lows right there. As soon as it did that, It rallied, pulled back right near the lows of this pullback, and then as soon as it completed that, rallied again up above these highs. So again, it forms a little ABC type of upward pattern that doesn't exceed the high of the advance so far. After that, again, you have, in this case, a pretty choppy but very large and volatile decline that happened next. January high of this year was somewhat similar, and in this case, you had a November low, you had a series of higher lows going on here, put a high in January, and then you had this big decline, and that decline took out both this first support level and this second support level, and it came down under there. Then you saw a similar pattern where you had advance for a few days, pull back for a few days towards the low, advance again towards the high, giving this little ABC upward pattern before a more steady, larger downward move. So looking at the current market, the advance is much more steep and the pullbacks are smaller, but there's clearly higher lows forming here. This decline off the highs doesn't look all that bad, but some of the sectors broke down on this decline. Retail, the technology, and housing in particular that broke a lot harder than the rest of the market. They have a very similar upward thrust and a downward move back towards those lows, and then we had a big up day yesterday back towards these highs. So what might happen is this might be a little upward ABC and then get a stronger, larger, and steadier move down over the next several weeks. If that happens, I think the bare minimum to look for would be kind of the targets for a reverse head and shoulders pattern, with this being the left shoulder, this being the neckline up here on these highs, this being the head, and then the right shoulder, the most reliable shoulders will come down, undercut the lows of the left shoulder, at least briefly, and then very quickly reverse. At a bare minimum, I would expect that to come down and undercut these lows. So that's just something, in case this is actually a new bull market and the market comes down here and advances, they'd look for kind of a target area for this decline in there. I actually think that this bear market's going to go on longer and see new lows, but that's off into the future.